Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Euro dollar, a bullish engulfing pattern on Friday after the previous session's indecisive spinning top. That was also disguised as a bearish harami. The market closed for the first time over the dark blue upper trend line of the late January to date descending wedge pattern, currently 117.17 to 117.74, but was capped for a second consecutive session by the combination of the June 2025 high at 118.29 with the June 2018 high at 118.51, a little beyond that. The base of the most recent action continued to be once again, somewhat unsurprisingly, the slowly rising green short medium moving average, currently 117.74. Looking below, we have interesting combination of the October 21 high at 116.92 and the mauve medium moving average, currently at 116.99. And just below that, the significant gold long moving average, currently 116.70. In the bigger picture, the market remains within the mid-2025 based bright red shallow bull channel, which is currently 116.19 to 120.97. This pattern continues to be the main showrunner for this market. Now, so far today, an interesting move down after events over the weekend, an open right on the green short medium moving average, then filling in the weekend gap before dropping down through the dark blue lower trend line of the descending wedge, and that's sealing the breach above, to be halted, I suppose, unsurprisingly, by the combination of the mauve medium moving average and the October 21 high. The proximity below the gold long moving average, I am sure, also had something to do with it. Before moving back within the dark blue descending wedge pattern for now, the overall pattern still remains the bright red shallow bull channel. Cable, aka sterling against the US dollar. An indecisive spinning top pattern on Friday after the previous session's combined immediate countering key reversal down, bearish double and bearish engulfing pattern, if only just on the latter. The market was held up for a second unsurprising time by the flatlining gold long moving average, currently at 134.44, and seemingly attracted on a closing basis once more by the September 2020 high at 134.83. The market remained within the new pattern that emerged from a previous pattern. Originally, I noted a lopsided double top pattern from mid-January to late February. The key level was the low 4 weeks ago at 135.06. We closed below that level late 2 weeks ago and again early last week, but there had been some big obstacles on the way lower. Chief amongst these was the flatlining gold long moving average, then the 2024 high at 134.36, followed by the slowly rising mauve medium moving average, currently 133.98. From this lopsided double top pattern, as I say, I noticed a new pattern emerging, a bright red mid-January to date descending wedge pattern. It's currently 133.66 to 135.10. This pattern has taken over the running of the latest moves. Now, on Friday, we had interestingly exited below that viscous congestion band between 135.16 to 135.55, containing the 2019 high at 135.16 as well as the green short medium moving average, which is currently at 135.28. But we still had support below, unsurprisingly, by the September 2020 high at 134.83, the low of that day's market, and adjacent to the flatlining gold long moving average. In a bigger picture, prices maintain their stance within the previously broken, now seemingly repaired, very shallow dark blue bear channel, dating between early July to early August last year through to late January this year. And that's currently 129.74 to 136.01. Finally, I had previously set out targets below for the double top pattern, with a primary target X down in the 134.17 zone, with a secondary hard to reach target X1 down in the 133 zone, 133 even zone. Now please bear these in mind. So far today, an interesting move down after the events over the weekend, looking like a bearish opening long black Mariposa right now. The prices opened at where they closed at the September, well, it was like a long black Mariposa, it's looking more like a hammer now actually. And where they closed at, they opened where they closed at the September 2020 high, and then dropped down through the gold long moving average and the 2024 high combination, as well as the mauve medium moving average, and even the bright red lower trend line to the descending wedge pattern, to finally halt, somewhat surprisingly, at the purple highlighted extension to the neckline of the small April to May 2025 head and shoulders continuation pattern, which is currently at 133.16. I suppose in hindsight I should not be that surprised this held up prices, as it had done in October and sort of did in July, both last year, and along with the nearby green neckline, currently at 133 even, for the August to October 25 head and shoulders top, and the March 22 high at 132.98 for January this year. So altogether, a significant new dynamic band, currently between 132.98 to 133.16. Now from this base, prices have pulled back up, back within the bright red descending wedge pattern, over the mauve medium moving average, but under the September and 2024 high and gold long moving average so far. US dollar against the Japanese yen. An indecisive doji cross on Friday after the previous session's indecisive spinning top. There was also a bearish harami in hiding. It was nevertheless a third consecutive close over the dark blue upper time, currently at 155.67, of the significant late January to mid-February bearish shift pitch hook, as well as over both the green flatlining short medium moving average, which is currently 156.02, and the mauve slowly rising medium moving average, currently at 155.29. A significant attempt higher, despite the last two highs being lower. As I said last week, and I quote, "This is potentially an important move higher." End of quote. In the bigger picture, we still remain within the previously breached but seemingly repaired bright red April to November 2025 bull channel, which is currently 151.69 to 158.51. Now I said last week how, and I quote, "I once again suspect I may need to finesse this bull channel to a slightly more acute bullish angle. Maybe look to retire the dark blue bearish shift pitch hook soon." End of quote. I am close to retiring this dark blue bearish shift pitch hook, but I also drew last week a new, slightly steeper September and November 2025 to date bright green bull channel, and that's currently 153 even to 160.72. I'm now wondering if this will take over the bullish incentive. Finally, I've been continuing here the theme of very lopsided double top seen in sterling against the US dollar, and even more lopsided double top in euro against the US dollar, and how we might have here a very nascent double bottom. Thus the key level to watch for would be a significant move up over 157.72. That's something to keep bearing in mind. So far today, a lower open after the events over the weekend, based on the broken dark blue upper time and a strong immediate move higher through the green short medium moving average and towards the key 157.72 level. So far it looks like a combined bullish engulfing pattern and bullish opening long white Mariposa. US dollar against the CNH, the offshore Chinese yuan. A reactionary bullish white soldier on Friday, unsurprising given that the previous session was a fifth bearish black crow. So a little profit taking before the weekend there. We were back within the original December 25 to early February this year bear channel. That's currently 681.77 to 686.34, and capped by the significant 50% Fibonacci line of the February 22 to April 25 move at 686.60, though closing just over congestion at 685.58. Further below, we have the April and March 23 lows at 682.95 and 680.70 respectively, before we have a dead zone until the 50% Fibonacci line, the May 20 to March 22 move at 675.06. Whilst on top, we have the May 23 low at 689.53, and then the newer, broken, shallower bear channel, currently at 690.09 to 693.70. Now, so far today, a gapping higher open after the events over the weekend, since filled in, but the market has based on the old breached upper original bear channel line. And we are now looking at the May 23 low overhead at 689.53, but right now we're looking like an indecisive doji cross of all things. US dollar against the Brazilian real. An indecisive spinning top on Friday. That was also an outside day after the previous session's indecisive spinning top on its own. The market had based around the bright red October 2018 to date uptrend, currently at 513.04, though it showed little interest in either heading lower or higher. We have further support below at 508.16, the May 24 low at 504.32. Overhead, apart from the congestion formed over the last 5 weeks, we have little resistance until some lesser Fibonacci lines at 524.07 and 527 even. Overall, we still remain within the important dark blue mid-December 24 to mid-April 25 bearish shift pitchfork in between the overhead dark blue middle time, currently at 520.30, and the dark blue lower time below, currently at 494.39. This long-running bearish shift pitchfork is still the very excellent showrunner here for this market. US dollar versus the Mexican peso. An indecisive spinning top on Friday after the previous session's multi-layered bullish engulfing pattern, bullish opening white Maribosa, and possibly inverted hammer pattern. Below we have the previously breached dark blue lower bear channel line, currently at 1703.02, of the November 25 to date based bear channel, and that's currently 1703.02 to 1748.09. This is not a too well defined bear channel, but it is still there and has been the showrunner here since late last year. However, in the attempts lower in January and February, prices found it tough testing the March and April 2016 lows at 1709.23 and 1703.89 respectively. So please bear that in mind, especially after this last Monday's reactionary move up. So it's last Monday's one, after testing this zone below. We still have nearby a late January to early February possible bearish cat's ears pattern, though this is looking very distant as an idea, and I am considering retiring it. We're also still within the bright green April to November 25 bearish shift pitchfork, in between the bright green middle time below, currently at 1695.10, and the overhead bright green upper time, currently at 1751.45. Interestingly, the dark blue upper channel line and the upper time, along now with the green descending short medium moving average, which is currently 1754.73, make up a dynamic descending congestion, currently 1748.09 to 1754.73. We also have the July 2017 high overhead at 1743.74 and another small congestion further up between 1756.95 to 1759.58, containing the combined August 2017 and July 24 lows at 1759.58. Now, so far today, strong opening higher after this weekend's events, but not enough to test as far as the first congestion overhead, and that's the July 2017 low, not yet at least. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.